Good day, all. Ira Epstein of Linn & Associates with your SPDR ETF video for this Monday, the 28th of December, 2020. Well, an interesting weekend. We had a Brexit deal. We had the president change gears and sign the COVID relief package. We just saw a House of Representatives vote take place, whereby passage of the $2,000 instead of the $600 one-time payment was approved. That now goes to the Senate. I don't know if they'll debate it or if they'll just vote on it, but something will happen with it there. And it was interesting to see how many Republicans did cross over to make passage of that bill by 2/3 on just the very first vote try on it. It could have gone for a second vote try the way that it's set up when the way that they brought it to the floor. But in any case, it passed, and the markets are probably getting a little boost. At least early on in the futures markets, they are higher on that news. Metals are higher too. So let's go and take a look at the charts and get a feel. First of all, the Biotech ETF. Would you have thought it's going to be a down day like this today, down 2.37%? But it is. And when you take a look at the chart, it's actually gone into a downtrend on the swing line. You now have lower highs and lower lows, the definition of a downtrend. To break that, you've got to get back over 152.64. The market is over the 18-day average of closes. Now, I look at where price is to the 18-day average as a indicator of the bias of the market. To me, bias, what that does is it filters the swing line. So if the swing line's pointing down but the bias is up, I say the market, while the swing line is in a downtrend, the bias up, the two counter each other. Where might this market want to head for support? Well, wherever that 18-day average is often the first area, but this market hasn't been able to do that since November. So until it can do it, I question if the market has the power to drop to that number. How's that? I have no reason to be short, so questioning it costs me no money. But it is a sign not to be long at this point in time on that chart. Where are you in terms of Bollinger Bands? Well, since you gave up hitting it over and over, what we call that gorilla glue trade. Why I named it that after Kramer's name of different things. I think he's very interesting as a chartist. You came and you hit it over and over. That's often accompanied when you have an embedded reading. Embedded means the slow stochastic indicator is keeping both its numbers day after day after day over an 80 reading. When it gives up like it did right here, it's often a sign, unless it re-embeds the next day, brings out that red line back over 80, that price and the 18-day average are going to make a run at each other. In all fairness, you haven't lost that embedded reading yet, so while I say from November you haven't broken it, you've been embedded that whole time, which is a long time. Is the market maybe priced in all this temporarily? Yeah, it might have. That's something you got to think of. Is there a reason to be long that on this chart? I don't see it. Let me go to XBI, the Biotech ETF. You can see how that is done there, and we were on that just right through here. I want to go, this is the one I was saying, I was talking to myself. SMH, the semiconductor. Heard an interesting thing, I think it was on CNBC today. As the analysts there were talking about semiconductors, and they now interpret semiconductors as necessary in practically every electrical device. I'm in that camp with them. There's almost nothing you buy that doesn't use a semiconductor if it's using an electrical charge of some type. They're all smart devices. And that's the interesting part. I know I bought my wife a makeup mirror, and I'm looking at how it works, and you just swipe your hand and it goes to the different brightnesses, and if it stays off, you can have it where the semiconductor will turn it off so it's not using the charge. These things don't even go with hard wiring anymore. They charge just like your phone, but it's all these type of chips that are in things today. And what they were saying is it's the new steel of this new whatever we're in since the 2000s. I am not going to argue that. I think it was a pretty clever observation. What are we doing though? While we have an uptrend on the swing line, we're staying completely under the 18-day average, which keeps the bias down. Till you close over that 18-day average, you have nothing on this chart. XLI, this is the industrial sector spider, same thing. And worse here, do you notice how thin these Bollinger Bands got to each other and this sideways action? I termed that a pipe, for lack of a better definition. And in those, what often happens is you need a psychiatrist. And the reason is you think you're going to break out one way or the other and you don't. And you keep churning yourself. I taught myself over the years there are certain patterns on a chart that I don't want to be involved in. Duh. This is just spinning yourself. And if you get involved, you're tying up money that might be doing you better in a market that doesn't have that pattern. You could also be losing money in a market that doesn't have that pattern. But you're putting it, in my opinion, to better use than right here. I don't see anything. Again, I have the swing line up, but I have the market under the 18-day average. I got nothing in that. In the energy sector, we're still in a downtrend, even though energy prices themselves have been going higher. So whatever makes up this particular spider, this one's got to bear weight to it at this point. Until you take out the I think it was 38.95 level right here, 38.85. Till you take that out, the trend is down. Today's break low, if you take a look at Fridays, you didn't take, Wednesdays actually, you didn't take that out. So you still have the trend down, but you're very oversold. If you can reach further down, maybe you can get to the lower band. But remember, you haven't hit that band since October. So it has a hard time getting to it. Always build that into your psyche. QQQ, what do you do the first time you get up right next to a Bollinger Band? On the upside, be it or the downside. If you're in the market with a bullish position, you're coming out. If you're in the market with a bearish position, you're taking money, again, out, off the table, whatever you want to call it. And that's what I teach. Now, I know some people try to ride it and go, oh, this is it. I'm not going to be able to get back in. Nonsense. You may not, but there are ways to get back in. That's what I think happened today. I think as you got up in some of these markets and you hit these upper Bollinger Bands in the emerging market, I think the smart money started taking money off the table. Are we in an uptrend? Yes. Are we forming a possible pipe? I'm scared. You are. Nervous for it. Gold. What do you do the first time you hit Bollinger Bands? I tell you to take money off the table. And if you do, that's what I teach. Doesn't mean it's the right thing. That's what I teach. Is the trend up? Yes. Market momentum? Well, you're overbought. Overbought at a Bollinger Band. Let it embed and then I'll take another look at it, or let it correct and I'll take another look at it. That's how I'd view it. When we come to GDX, couldn't even make it to that upper Bollinger Band number. You're really having trouble at the 200-day average. You popped over it today, but then right back under it. Difficult market right here. I don't think there's much there. TLT, to my surprise, this market had an outside day up, and I am surprised. Now, if you take out today's low of 156.10, on Tuesday or Wednesday, I think you're headed back to the lower Bollinger Band, wherever it's at. But until that occurs, because the market got over, it had an outside day up, I think the pros are buying it, looking to see if they can get it up to that 158.84. Could it be a lot of noise at year end here and you're just going to get churned? Yeah. Difficult time to make trades. Do not treat these markets like normal markets as you're coming into year-end evening up, traders going away, I'm going away. Other people, if they don't go away, they just want to take days off at this point. That's what you're going to run into. And I know you're going to tell me it's not normal because of COVID, and I'm the first one on the street to agree with you, but it's a hard time. You've got to be careful here. You only have a 3.5 trading days this week. Again on Thursday. You close early, you're not open on Friday. Do you honestly think people at the last minute are going to take big positions? If you do, great. I don't see it. FXE, which is the euro, correcting. Still in an uptrend. You corrected the momentum out of the overbought. Still looks to me like the uptrend is good until you get back under the 114.44 level. If it climbs, maybe it gets to 115.21 to fight a resistance story. In the afternoons, even when I go away, I typically, like I'm going to do, I typically put out videos for my paid subscribers. I want them to be on top of the market. Could they not be every day? Typically they are, but it's possible. Remember, on the weekends, I do put out a weekend video, so you're going to want to see that. Remember, again, I'm not going to be here after tomorrow. You won't see me the weekend of January 7th. So I'm going to take off most of next week, and I really this week don't miss much. You're going to miss me on Wednesday, and then I wouldn't be putting out videos anyways on Thursday or Friday. The cost of my subscriber video for the SPDR ETF, $8.95 for the first 30 days. You can read about it on our website under the word research. And do me a favor. If you could, subscribe to this video. If you like it, put a thumbs up, whatever it is. Let the world know you think this is worthy. Otherwise, I should stop them. I'm Ira Epstein. You have a great day, and I will talk to you later.